Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we had a very ugly week last week. The NASDAQ was down 4.9%, S&P down 2.4%, and the Russell down 2.9%. These are pretty bad numbers. We're watching the overnight action as we come into this week. We're seeing a bit of a rebound as we come into Monday, but there's a lot going on in the markets that we're going to have to be watching this week. We have unemployment coming out. We have a fair amount of other economic news that will be coming out that will impact the markets, and we still have earnings. There's plenty of those happening as well. One of the biggest events last week was the surge in interest rates as we saw the 10-year move up to 1.61, and that basically freaked out everyone. On Thursday, we got an RTX sell signal on the yield suggesting we would come back in for a couple days. We dropped on the 10-year about 3.8%, so it backed into the 1.4 range, and this was significant. Not only did that happen, we saw a collapse in the yield curve steepening, which it appears that the Fed maybe intervened. I talked about on Friday's video that it looked like the Fed was losing control. They still got a lot to watch as we move forward in the economy. There's going to be plenty of obstacles along the road, and the interest rates are going to be key. I talked a bit about the possibility of a bond failure. This is still out there, but I also emphasize that that is not happening at the moment, but it is setting up for a potential surge at least to about 1.8 to 2% on the 10-year. I will go through this in tonight's video. But as we look at the markets coming into this week, we have ISM manufacturing coming in on Monday. On Wednesday, we'll get the ADP report, expected to show about 170,000 new jobs. And on Thursday, we get the typical claims and continuing claims numbers. The claims are expected to come in about 750. They have been coming in a bit better than expected. The continuing claims are hovering around 4.4 million, and I expect that to continue as we go forward. I see this number being stable. I've talked a lot about this in the last few weeks. I don't see this number in play or having any material effect at this time. As we come into Friday, we do have employment coming out. We're looking at unemployment to remain at 6.4% and about 170,000 new jobs to show up. Just to talk a little bit about the earnings, we still have over 500 earnings reports, and this will continue into next week as well, as we have another 400 plus coming out next week. This will finally put the end to the earnings, but there's some substantial companies coming out this week, and this is going to continue to have some influence on market sentiment. The primary thing that I'll be watching, as I mentioned in both the live stream last week as well as the video on Friday, is we need to watch these interest rates and the actions there. I'm going to start to key in on some of the open market operations by the Fed. I'm going to be looking for anything they're doing that is trying to influence both the yield curve and some of the yields on the intermediate, primarily on the 5 and the 10-year maturities. Let's go ahead and take a look at the charts, see what they're telling us for this week. Before digging into the WaveTech Database, I want to look at the dashboard on portfolioexpert.com. And what we're going to see here, this week we did see some selling on the intermediate models. The last time that we saw any real selling was back in November 2nd. And then we saw a reversal and some more traction coming into the markets. But we're starting to see some liquidation on the intermediate models. As we review just a little more in depth on the dashboard on Portfolio Expert, you'll see that we do have some red across the board on all the sectors. So there is some movement across the board. It's not material yet, but it is the beginnings of at least a rotation at this time. As we look at the WaveTech dashboard, we'll see that we dropped from an 84% bullish down to 80%. And just like with the short-term database, we're going to be watching this very closely. It should back up toward 72 to 68%. If it gets below that level, then we'll see a further liquidation over the next several weeks. Now, this is something that takes weeks to unfold, since this part of the database only updates every Friday. Let's go to the short-term database and take a look, and you'll see that we have moved to 27.5% bullish, way down. We're down from 71%, and we've seen this thing continue to sell down. As we look at the All Stats page on WaveTech, you'll see that there were about 1,150, more sell signals, only 150 buy signals coming out of the database. So we have negative rotation on the intermediate. There was roughly about 1,500 buys. From an optimization viewpoint, it was about 600 net, but this is the beginnings of the negative rotation that we're likely to see start to unfold as we go through the month of March. Since this is the first day in the first week of March, we're going to watch this very closely, especially on the short term, to see if we can hold the 27% level. If we get below 22%, then that would indicate a full liquidation and a possibility of going down to somewhere between 8 and 15% bullish. And when it gets to that level, it does take multiple weeks to recover from that. If that occurs, or if we stay below 42% for the next week, this will also set up further liquidation in the intermediate models. As I begin the review of the S&P 500, the futures are up 26 handles right now, up 0.68%. We're hovering back to that 40-period moving average. And as I discussed last week, I was looking for the market to dip below the 3,800 level. We did get down to 37.85. S2 on Friday was 37.79. We bounced off of that, and we're seeing one of the issues that we're going to have to watch closely is that the PPM1 now is at a minus 0.24, basically at trend level. That suggests that there's going to be a fair amount of resistance back towards the 38.68 to the 38.81 level. I'm not sure we'll be able to bounce back to that level, but things are looking like they're going to stabilize. As I mentioned, I think all eyes will be on the interest rates as we go through this week. And I do expect to see them continuing to back off or at least stabilize well below that 1.61 level. But as we look at the S&P here, this pattern suggests that the 40-day moving average is the demand line in this pattern. I'm going to go to the weekly. We closed right on the 10-week. 38.08 was the 10, 38.09 close on Friday. So we're opened a little bit below that, but we're still hovering around the 10-week moving average. And that still has a positive upslope of 0.37, which is still the uptrend. That's going to be support at 38.22. So we're likely to stay above that level. As we look at the SPX daily, we see that we closed below the 40, but based on the futures, we should rebound back toward that number. And the same analysis that I just talked about in the futures will be consistent there. Most of the analysis for the moment, you have to go to the weekly. Same thing, 38.14 is the 10-week moving average. That is rising about 10 handles per week. That's going to be right at 38.28. We should rebound back above that level. We should move up toward at least the R2, R3 on a weekly basis. But you can see there's a clear downslope forming on the SPX, and there's going to be a fair amount of overhead resistance I don't see us getting back above the 3,900 level at this time, but we should stay, at least for the week, we should see a R2 S1 is probably likely to be the extreme. One of the things that did happen on Friday, the STX number is 3811.16. We closed at 3811.15. So we closed right on the STX number. It's like splitting hairs here, so it's hard to put a number in whether we got an STX weekly buy on the cash or not, but it's very close. But the expectations are still the same. R2 is likely to be the extreme. S1, R2 for the week. I'll update that as we go through the week. The next market I'll cover is the NASDAQ. It's up 1.12% overnight at 13,058 last trade. As I talked about last week, and I'll show you on the weekly, is I thought we could go down around 12,560. We got to 12,600. We're seeing a bit of a rebound. But this is a much different pattern here, and it does look like on the daily that the 10-period moving average is going to cross over the 40, and that will actually be more of a stabilization effect than a negative effect, and we're likely to see the market move up toward that 13,319 over the next 2 days. But that will be substantial resistance because we now have PPM1 on the daily down 0.56, which is in trend mode. So the resistance is going to be between 13,240 and 13,319. Reviewing the weekly chart, we also have the 10-week moving average at 13,200, and it is actually still in an uptrend. And a lot of times you'll get this conflicting information where the short-term models are indicating that there's a short-term downtrend while the intermediate model is still in a minor uptrend. And this is the case here, and that 13,200 is right into that resistance zone. That's still going to act as a demand line. But the thing that happened on Friday, we did get an STX buy signal on the NASDAQ. STX was 13,026. We went out at 12,911. That suggests that we could get 1 to 2 weeks of sideways movement. That would suggest that we would go back into the grid. And as we look at the grid for this week, there you are again at that 13,195, 13,345 is R3. The extreme is 13,468. I don't see us getting above that, but the uptrend is still in place on the intermediate. So what we're seeing here, short-term correction, longer-term trends are still in place. This will be substantial support, 12,777 S1, and we're likely to see at least an S1 R2 possibility of a S1 R3 for this week in the NASDAQ. The next market that I'll cover is the 10-year treasuries. As I mentioned in the opening comments, we did get an RTX sell signal on Thursday. You can see it here. The RTX number was 1.44. We actually closed at 1.51, and then we saw it retrace on Friday with it being down about 3.82%. Now, if you look at the market grid, it's rolled over, so we should see further downside. The key average in this pattern right now is the 10-day moving average, 1353. It's coming up at 20 basis points per day. As we look at the grid for tomorrow, you'll see that S3 is 1376. So look for the potential for an R1 S3 in this pattern. We're likely to move toward that S3 just off of this RTX sell signal. This will keep some stability in the market, especially since market participants are focusing in on this. I also mentioned in the opening comments that the yield curve crushed, and you'll see both of these charts. The chart on the right is the 10 and 30. You'll see it dropped substantially from 850 down to 722, and the chart on the left is the 530, and it's dropped substantially all the way down from 1.6 down to 1.4. And this is a big drop, and this is likely to put a cap on this steepening for a while. And I believe that the Fed has a lot to do with what's going on here as far as the curve goes. So while I mentioned that I thought they were losing control, somebody stepped in, whether it's market participants saw the opportunity, whatever. We are going to see some stabilization here over the next several days. And as I mentioned in the opening comments, I'll be watching open market operations and other clues for this market. The final market that I'll cover is gold. On Friday, we did see an STX buy signal. We closed at 1728. STX was 1744. We're seeing gold up about 20 handles, trading back toward the 1748 level. If we look at the market grid for today, R1 is 1739. We have traded above that and moved right to an R2 at 1750, almost an exact hit on that. All of the action that we're going to be able to focus in on this week, it will be on the weekly, and we'll see that right now the R1 is 1746, next level R2 1765. So the worst case would be an S1 R2. We could move back to 1784. This market is trying to turn up. I've talked about this downward pattern. We saw some acceleration, making new lows in the pattern, but it looks like it wants to come back toward these moving averages on a weekly basis, which is going to move us back toward the 1817, 1820 level over the next week or so. But for right now, we are looking at some stability, and the key number for the week on gold will be S1 1711, R2 1765. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.